Nothing in this recording is intended as investment advice, and the people in this recording may hold positions in the companies they talk about. Do not make any investment based solely on a tip or recommendation. Please do your own research.
Hello and welcome to Zak's Traders Cafe. Today I'm joined by Charles Dickson, who is CEO at Roadside. How are you today, Charles?
Very well, Zach. How are you?
I'm very well. Lots of news, well, a big announcement last week from Roadside. Maybe you can tell us about it.
Yes, no, we did a placing on AIM, raising £20 million, or just over £20 million for the company. We also announced our second corporate acquisition in the energy forecourt sector, a very, very interesting business up in Shropshire. So that will start really giving us some scale in terms of fuel buying, and then we've got some more acquisitions that are imminent.
And in terms of the quantum of the raise, obviously the London market, not known for massive liquidity, etc. But it seems that the market's quite happy with what you're doing.
Yeah, I mean, we're effectively buying freehold properties, and then we're operating them and getting a double-digit return, and it's IHT qualifying. So we've got a number of investors, both individual investors, but also institutional investors who are very attracted to what we're doing. There's very good returns to be made in the M&A roll-up opportunity in the forecourt space. The sector's very fragmented, and scale really does drive value. So the more of these businesses we put together, the more profitable we'll become, and the better the equity returns will be effectively.
And is this part, I mean, obviously we know that you are an ongoing situation, you're looking for land grab and opportunities. Is this a deal which will be sort of one that you'll digest for quite some time, or is it not? It is part of something quite relatively quick process that
I
you're
think, well,
26 and 27.
that's a very good question. We're looking to buy at least 40 sites a year for the next 3 years. With this acquisition, plus the sites we're in exclusivity on now, that will take us to just over 20 sites. And I fully expect us to hit the 40 before the calendar year end. And that will make us a sort of top 10 energy forecourt operator in the UK. And then after the end of year 3, the idea is we're a top 5 operator. So I think we'll grow very quickly. I don't think some of these businesses need much digesting. I think the only thing that would constrain us is capital. But because we're listed and we've got very supportive shareholders, but also supportive lenders, we're not really concerned about that. I think there'll be plenty of capital for the acquisitions we want to execute.
All right, you must be one of the early CEOs who's looks as though he's relatively immune from the lay of the land in terms of the economy, politics, and everything else. Is that still the case?
I think because we're providing a utility to customers, we're not really driven by discretionary spend. So we're fortunate in terms of people need fuel or energy to get to work, go to hospital, to drop kids off at school, to go about their day-to-day lives. So it's more of a necessity rather than discretionary spend. And then the more customers we can convert in the shops, then obviously the better we do. So it's a big opportunity for us, and we're looking to layer lots of local services at these locations, whether that's post office or laundry or pharmacy, Amazon lockers and InPost lockers, ATMs, etc. So lots of services, so lots of jobs people can do in one visit, and that's really what we're looking to achieve.
So you're basically the sweet spot between being an infrastructure player and a utility.
I think so, yeah. I think that's a really good way of looking at it, with a bit of real estate thrown in. So yeah, infrastructure/real estate and utility. Yeah, absolutely. That's exactly where we are.
The question, I suppose it's a side question, but one I'm quite keen to ask. In terms of EV charging, has the revolution happened? Is it working? Is it going to get there?
The revolution definitely has not happened. I think there's 2 million EVs now on the road. There's 42 million cars and vans. So the penetration is tiny, given we've been at it for nearly a decade. I don't believe there will be a total energy transition when it comes to transportation. I think there'll be multiple ways we decarbonize transport, not just electric vehicles. Electric vehicles lend themselves very well to cities and large towns. They lend themselves very well, much less well to rural locations and traveling up and down the country. So they also don't have the same lifespan as an internal combustion engine. So there's a number of reasons why there won't be a total transition in our view, but we're not really bothered either way. We're looking to play all the different forms of energy. We're not looking just to pay petrol or diesel or electric. We're looking to play all of it.
And the other question, which is sort of a side question as well, you are obviously operating in the UK at the moment. Is there anything to stop you looking further afield, or are you quite happy with just settling on this geography at the moment?
We're very happy with the UK at the moment. There's plenty of opportunity for us here. We'll become a much bigger business in the UK before we look elsewhere. But the same opportunity does exist in other countries, particularly in Northern Europe. So, once we do get bigger, then we will look abroad. But for the time being, we want to be fully focused on the UK.
Is the goal further down the line for you to be a company that pays a dividend as well, given that you are looking at a sort of business which should be throwing off cash?
Yeah, so we're going to put in place a dividend for financial year 2027. So that's really from the back end of this year, we'll begin to start paying a dividend. We're not an income stock, Zak. We're a growth stock, so the dividend will be low. It'll be a 1% yield to start with, but it's really to get into the habit of paying a dividend and the discipline of it, and to reward investors for investing in us. And then we'll look to progress that dividend every year and grow it.
Right. And finally, is there a chance that other people look at Roadside and say, well, that's a good idea? They might either say, well, we'd like to have a bit of that, or we might just do our own Roadside.
I think there are lots. There's a few private companies doing what we're doing, but there's plenty of opportunity for everyone. I think one of the ways that we can set ourselves apart is by being professional, by having a best-in-class management team, and also probably having better access to capital by being a listed company. So they're sort of the advantages we've got. But there are other people privately doing it. We don't pretend to be the only people in the UK doing this.
But perhaps the management and being listed is a benefit to you.
I think so, yeah, 100%. We've just raised £20 million. There's not many private companies that can do that easily. Being listed gives you access to institutional capital, and we intend to take full advantage of that.
Charles Dickson, CEO at Roadside, thank you very much indeed.
Thank you, Zak.